Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Connon, along with Dennis Dick, and we have Paul Yook on the line. He's a co-founder of LifeSci Index Partners and the portfolio manager for the BioShares ETFs, BBC, and BBP. Paul, how you doing on this Friday morning?
I'm doing great. Thank you for having me.
All right, so you picked, one heck of a sector to create some ETFs in. A lot of volatility and whatnot. A lot of different stocks to talk about, but before we get into individual stocks, you says you think January is a great month for biotech, and boy, it's been beat up at the end of this year. Give us your January outlook, as well as some things that you'll be looking for at the J.P. Morgan Healthcare Conference.
Absolutely. So for those who are listening who don't know, the J.P. Morgan Healthcare Conference is probably the single biggest investment event in the healthcare sector. And we're not just talking about biotech, but we're also talking about medical devices, hospitals, and pharmaceutical companies. And this occurs usually in the second week of January. So in 2016, this begins on January 11th. Now, what we've done is we've looked at returns over the past 10 years in January, and biotech tends to perform extremely well. And so if you look at over the past 10 years, during the lead up to the JP Morgan conference, it has outperformed the S&P 500 9 out of those 10 years, and the returns have been positive for 8 out of those 10 years. So we're expecting similar things. I mean, you never know. But the odds are generally with you that you want to own biotech in January.
Okay, so let's talk here about your ETFs here, BBC and BBP. What's the difference between the two?
Yeah, good question. So, we're the only ones who do this. Biotech is actually today it's a pretty broad sector, and there are many different kinds of companies, but we really view the sector as having two very distinct sets. And when you look at biotech companies, you've got the kind of, let's call it the riskier, higher volatility companies that are running clinical trials. So most of these companies are smaller, and these are the ones that you'll often see kind of in the news because they may have had a very interesting clinical trial result, say in Alzheimer's or in cancer. And you'll hear buzzwords like phase 1, phase 2, phase 3 clinical trials. All of those companies go into our BBC fund. And so, the BBC fund has really the next generation of exciting biotech companies. On the other side, you have companies that have really done all of that early work and now have an FDA-approved drug. They're actually selling. So these are selling organizations. They're manufacturing. And they're more of the traditional company that we would think of. And there are about 40 of these. There are fewer of them. They tend to be larger, and they definitely are less volatile because they don't have that clinical trial risk anymore. And those go into BBP. And, what we've done is we've created really two distinctly separate investment vehicles. BBP tends to be less volatile, so it tends to attract folks who like biotech but just don't want some of that clinical trial risk.
How do you, what's your investment process for figuring out which companies are going to go into, your new BBC? Like, how do you screen for the companies that obviously have potential new drugs on that are going to come in?
Yeah, so what we do is we have a pretty defined set of rules that are on our BioShares website. First, we make sure that the company has certain minimum size and liquidity requirements, so they have to have a minimum $250 million market cap, and they've got to trade at least $2 million a day. Beyond that, we have a team of 25 folks here. We've got 6 PhDs in the biological sciences, and we look at every company. And the one thing that we ensure is that these are pure biotech companies, and that's pretty important because these days specialty pharma is in the news, and spec pharma companies have been knocked around a lot. You've had private companies like Turing Pharmaceuticals where they raised an HIV drug price by about 5,000%. You've had companies like Valiant and Horizon in the news, and also having some congressional investigations on some of their pricing practices. And, I think a lot of folks don't know that specialty pharma is not biotech. It's a very different industry. And so one thing we do is we look through every company and we ensure that we're getting pure, innovative biotech companies. And then the second thing we do is we look at the lead products and the product portfolios, and we determine which of the two baskets essentially it goes into, the product portfolio, BBP, or the clinical trial portfolio, BBC. And we do that work, every 6 months we rebalance the funds and we recompose them.
Going into this whole January effect, and you said it's traded positive in 8 of the last 10 Januaries. Biotech has outperformed the S&P in 9 out of the last 10. I mean, what do you attribute that to? Do you think it's just kind of these stocks are real volatile, and maybe people got beat up in it, and they're like, you know what, I still have confidence in this stock. I'm going to sell it out in December, hold it for my 30 days and buy it back? Or do you think it just has something more to do with like the drug trials and, the calendar, the FDA calendar?
Yeah, it could be, it could be both of the factors that you mentioned. I tend to think it's a little bit more of the announcements that come out at the sector. So, I've been attending the JP Morgan Healthcare Conference and in and around it for over 10 years. And what you have there is you have most of the biotech companies, pharma companies, investors, hospitals, medical device companies, all coming together. And so it's a natural place and time for companies to announce major collaborations. And so, last year on the first day of the conference, you saw a major biotech acquisition. NPS Pharmaceuticals was acquired for $10+ billion. And so as an example, M&A tends to be a natural thing to announce at that conference. It tends to be a natural place to announce major pharmaceutical and biotech collaborations or research initiatives. And so there tends to be a lot of excitement. As far as the tax loss or tax strategies, yeah, I think that's part of it. Certainly in a year like this, 2015, where you had you actually had outperformance, but it was very volatile. So most of the biotech indexes, including ours, are up, over 10% on the year, which is beating the S&P 500, which is flat. And so, having said that, you have a lot of individual stocks. Some are up a lot, some are down a lot. And there already are people who are starting to do tax harvesting strategies. So I think you will see people buy back in for the year 2016 simply because they want the exposure in 2016 in biotech.
Biotech obviously has come out of favor just in the last little while here. Do you see eventually, I just think, from a demographics perspective, pharma population's getting older, obviously, these stocks, you think longer term, even talk about the big ones like the Biogens and the Celgenes and the Gileads. A lot of these stocks, were the darlings here for the last couple of years. And really in the last 6 months, 8 months, they kind of just been hanging out. Some of them actually been coming down, like Biogen, significantly off those highs. Do you think eventually the tide turns here and these stocks become favorites once again?
I do. And so a little bit about our business at LifeSci. We have three different business units. We have an investor relations company called LifeSci Advisors, and we're one of the biggest and best in this field. We have 75 publicly traded clients, where we have CEO, CFO, board level relationships and ongoing discussions. We also have a newer investment banking unit called LifeSci Capital, and then we have BioShares. So we generally have a really good feel for the buzz of the sector, and companies aren't as focused as stock prices, obviously, as those of us on Wall Street, and they are very focused on doing research, doing science. And what I can tell you is biotech companies have the strongest balance sheets that I've seen in my entire investment career. I've been doing this for 19 years now. And so when we look at the clinical trial stage companies, those companies that are burning cash and doing research experiments, the BBC companies, they collectively have $20 billion of cash on their balance sheet. So that's about $200 million on average. And it's really a stunning number. And what that means is these companies are in charge of their own destiny. They can dictate their own future by running good science experiments and good clinical trials. So I do think, as you pointed out, the demographics are compelling. I think the scientific breakthroughs that are coming out of the field are very exciting, and I think the sector is going to produce exciting drugs in the months, years, decades to come. Now, volatility is something that definitely comes with biotechnology. It's higher than other sectors, but that gives folks an opportunity to, essentially buy low and sell high.
Is there any new holdings that just went into the BBC? Because a lot of our listeners like to trade the individual stocks here, and maybe there's a couple of companies that you guys are really excited about in this in your portfolio there. Is there any individual companies that you're more excited about?
Yeah, absolutely. So that's a really good question. A few minutes ago, we discussed the fact that we actually recompose and we rebalance our portfolios twice a year, and it's a very interesting time. So we last did that in June, and we're about to do it again this coming week, and we've posted on our index website, it's called LifeSciIndex.com, the proposed changes which will occur on December 15th, so that's just a couple of trading days away. And so what we have is we have a bunch of, I think the biggest change we have are new IPOs that came out in the public markets in 2015, and a handful of these are really exciting. So there are companies like Globe Blood, GBT, NantQuest, NK. There's a really interesting peanut allergy company called Aimune. The ticker is AIMT. Blueprint Medical, BPMC. So, this is what I call some of the very exciting IPO class of 2015, which will be in our BBC fund really within the next few days.
Just to Vanguard's asking you, I know it's another a stock out here, GBSN. Any take on that?
So that one is G. Give me the ticker again.
It's not doing too well.
Yeah,
here.
I don't know. This one's a 12-cent stock. I don't know if
Yeah.
you're that speculative here or not.
Yeah,
this one
yeah.
is in a world I heard here. It's went from $2.50 in August down to 12 cents. Usually when stocks do that, they end up continuing down. So
All right.
I don't think he's that.
Yeah, I'm sorry, I don't know that one again.
Okay.
I think
not that speculative.
the design of our fund. Yeah, no, it's a good point though. There are a lot of these biotech companies that are kind of, what I call single-digit midgets. These, $1, $2 stocks. Sometimes they drift down to 50 cents, and they're in a different ballgame. They have to be constantly raising capital, doing dilutive equity financings. It's really a toxic spiral. And so the managers of the company are more focused on capital markets and science. So we try to avoid that by having, a minimum $250 million market cap, which really is, in my experience, it's kind of this magic level where all of a sudden big institutions like mutual funds and hedge funds can buy the stock. You have heavy research coverage from all the big Wall Street firms. So I think that really protects investors from investing in some of these way too speculative stocks.
Got to ask you about VRX here. Gets the bees.
Yeah.
It's kind of had a nice recovery here. I got a little chicken in it. I tried to buy it at 80, got clocked, missed it at 70, caught it on the way back up, but I'm a little hesitant now here. The news has kind of died down a little bit, but it hasn't been able to get in triple digits. What's your take on VRX?
Look, VRX, Valiant, is it's a battleground name right now. There are so many factors other than the quality of the company or the quality of financials at play. And what I mean by that is obviously you've got some hedge funds, some high-profile mutual funds that are, you've got investors that are upset. They're highly levered to an individual name in their portfolios, and that leads to dislocation. So I think we can clearly say in hindsight $70 was this ridiculous price, and I don't think we're going to see that again. Valiant has some phenomenal assets, some phenomenal drugs in dermatology and in other areas, but they clearly have a business model problem which they are addressing. They shut down one of their distribution channels, a specialty pharmacy that they have, and there are all these congressional inquiries, and it's probably a scary time to be an employee there. And so, it's one of these things where whenever there's a nasty headline and the stock is down $10, I would probably think about being a trading buyer. But otherwise, if you're going to invest in a stock like that, you got to have a big stomach. What Valiant does is they do not invest in R&D. They spend about 3.6% of sales on research and development. Now, just to put that in context of biotech and pharma, biotech companies like you mentioned, Biogen spends 20% of sales on R&D. And so companies like Biogen are very likely to discover and develop the next generation breakthrough drug. Valeant is much more likely to buy and acquire an existing drug and sell the pants out of it because they have a great sales force, and that's what they do.
One more before we let you go here. Bluebird Bio is another one that's just been murdered here. August, it was a $150 stock. It's now a $61 stock. It's bounced off the lows. Is this one an opportunity here down here, or is this a stock that could see lower prices yet?
No, look, I definitely like Bluebird here at $61. What you saw this past week was the CEO, Nick Leschly, actually stepped up and bought $500,000. And that's not something he has to do. You know, you often see companies sell, see management teams sell. When companies buy, when CEOs buy, I really take note of that, you know, because this is something that he's not going to be able to trade. When he's buying shares at $50, $60, that means he's going to hold it for a very long time. So it's more than just a vote of confidence. And so beyond that, the company itself is without a doubt one of the leaders in one of the most exciting areas of biotech, which is called gene therapy. And whenever you have a cutting-edge technology, it's never going to go up in a straight line. You're going to have exciting results, and then you're going to have disappointments. And that's what we have. And for people who want to invest in really the next generation of biotechnologies and drugs, you know, the kinds of companies that are in BBC, I think an opportunity like Bluebird at, you know, $60 is pretty compelling.
I got to ask you about Martin Shkreli. I got to ask you, Shkreli, whatever his name is, man. This guy, because you mentioned companies that buy drugs and then reproduce them. This guy, I mean, I just got to get whatever you say is going to be my opinion on him. So give it to me, Paul.
Well, look, I can't say that I know him personally. I certainly, you know, he's around the biotech sector and the specialty pharmaceutical sector. So, you know, I definitely know second degree contacts. He is clearly a very intelligent person. He has a lot of investment acumen. With this first drug that made the negative headlines in the Hillary tweet, where he raised his drug price 5,000%, was a disaster. It was crazy. It was stupidity, and you know, it's not something that a publicly traded biotech company should ever do and would ever do. He happens to have a private specialty pharmaceutical company with a handful of investors, and you know, they're essentially found an opportunity to extract profits where they could. It's not a company that I would ever invest in if it were in the public markets. You know, as far as what he's doing, I mean, he's kind of in the public markets. He tweets every trade. A lot of different trades he does. He's been a successful investor recently. So I'm not saying I would bet against any of his investments. But as you know, look, we're in the business. I've been following the sector because I love that the companies that we work with, and we don't just invest in companies. We work hand in hand with some of these companies. They're developing drugs to save lives. They save children's lives. They save old people's lives, and they make it better. And raising a drug price by 5,000% does nothing but has negative consequences. So it's not a business that I would ever suggest anyone invest in.
Great input from Paul Yook, co-founder of the LifeSci Index Partners and the portfolio manager of BioShares ETFs, BBC and BBP. And you can bet we're going to have you back on in January, Paul. Thank you very much.
Looking forward to it. Take care.
Thanks, Paul.